Welcome back. Let's get a status check as far as the consumer sector is concerned. Now, Goldman Sachs expects consumer durables and electrical company growth to moderate in the first quarter of FY26. But lower inflation, tax cuts, favorable interest rates, lower interest rates, that is, should reflect in demand for the sector and sentiment in the second half. That's essentially the widespread belief. We have Pulkit Patni, Goldman Sachs, from Goldman Sachs, Nilesh Gupta, Director at Vijay Sales. We also have Kumar, Rajagopalan, CEO at Retailers Association of India, to run us through whether, this expectation is rooted in solid grounding. Gentlemen, great to have all of you here. Thank you very much. What we'll do, of course, is get that expectation out of the way, and then we'll get a real sense of where demand is as of now from both Nilesh and Rajagopalan, who will be able to help us with that. But Pulkit, let me start with you. As you say, demand is moderate, but H2 perhaps should be much better. What gives you the confidence?
Thank you for having me. So if you look at the next quarter, which companies will report, I think given an erratic summer, it is evident that any company having a summer portfolio is likely to see weak demands, or our channel checks are suggesting that whether it is with EMS companies or with brands, Q1 is looking to be a weak quarter. And that gives us the confidence that we are looking at a weak quarter in general for consumer durables and electricals. Having said that, the other underlying message we are trying to give is that we don't want investors to miss the forest for the trees, i.e. that there are a lot of factors which should support growth in the second half in the year thereafter. And that's some of the factors that you highlighted, that inflation is at the lowest. We've had tax cuts. We have interest rates which are at its lowest, and plus a favorable base, and which is where diversified electrical companies. So we want to be very clear. We are not talking about single product companies only. Companies that have diversified product base, we think are well placed in that scenario of a second half pickup.
And that explains your calls, Pulkit. I'm just saying, I will put up the graphics as well. Goldman has buy calls on names like Crompton, Havells, even KEI Industries. And as he's sort of talking about it, a lot of these are diversified names. Voltas is a sell. Voltas, obviously, a large part of their business comes in from cooling solutions. So just a point further on this, Pulkit, for these diversified consumer durable players or electrical appliance players, what are you working with? What kind of growth, or will the second half be a story of margin expansion? Or will it be both? What makes you positive on them?
Well, growth numbers obviously vary by each subsegment depending on penetration, depending on the base. If we look at few underlying drivers, first, the previous speaker spoke about real estate, and we know we've been in a 3-year real estate upcycle. Now, whatever gets launched will get constructed, and that's why cables, wires, switches, switch gears, we expect demand to be reasonably strong. Plus, the base effect for some of these other diversified electrical companies should also actually augur well for the second half. So while for the AC segment, we are working with an annual number of just about a mid-single-digit growth after 2 strong years of about 30% growth, FY24 and FY25. For the rest of the segments, we are looking at early double-digit growth, and that comes off a reasonably decent base. And that acceleration is what gives us the confidence of a second half and a FY27 recovery for these sectors.
All right, got that, Pulkit. Well, let's get in, Mr. Rajagopalan, into the discussion. So what are your observations with regard to how demand trends on ground? And if you could tell us geography-wise, where you're seeing the largest or the highest traction?
Yeah, if you really notice the business up to April, most of the retailers, at least across various sectors, told that their growth was around the 4 and 5% levels. It's in the month of May that our reports have just come in. We're seeing the growth is at 7% across all the sectors of consumers. And I think that's a good indication of where things could really land up into. The level of 4 to 5% is obviously not something that retailers want. The 7% is reflective, I guess, of the way in which the market is. The inflation levels are not anymore so much of an issue. Globally, India's got a decent stand to be able to manufacture enough and send. We've also got decent rains that's happened end of May, and that's also, it was earlier than normal, and that was good news, and it became rain. It was not pre-monsoon, so that also was a good indication all told. So I think things are looking decent. We've gone on to a 7% level. We'll have to wait for the June numbers to come, but my guess is that June will also reflect good numbers. I think retailers look forward to the double-digit growth that they are otherwise accustomed to.
Okay, all right. Got that, Mr. Rajagopalan. Let's get in Mr. Gupta. Mr. Gupta, you know, you have a store here in Mumbai in Bandra. Whenever I go, it's always full. And I've been quite satisfied as well, just as a personal feedback. What are your observations, though, in terms of demand trends? How was April, May and June? Lower than expectations or in line?
Good morning, everybody, and thank you for the feedback. I think in the retail as well as in in consumer durables specifically, what is important is the consumer sentiment. And I think the consumer sentiment is still strong. Yes, we've had a poor summer sale because of the erratic summer. We had monsoons all across. The south and the east was actually a washout. But that does not mean we should be calling there's a problem in the market. Yes, the other categories are growing. And what we feel is, except for the coolers, because coolers is specifically a summer product, it doesn't sell at the end of the year. But in the last 3 to 4 years, what we have seen is air conditioners do sell at during the rest of the part also, and it's pretty strong. And in some parts of the country, during the October, we have a second mini summer also. So we are hopeful that we'll be able to cover up whatever losses we have made in the summer season. Also, we have to understand that February and March were very strong for cooling products. So there, I think it slightly helped us to reduce the negative what would have happened otherwise if the February and March would not have been strong. Going on the other product categories, the televisions are holding pace. We are seeing a growth of around, although it's a single-digit growth, but at the same time, you also have to understand that the penetration level, at least in the markets where we are, is pretty high. And then washing machines, after 2 years, last year also we saw slight growth happening. This year it's again growing. So that's a very good sign. Refrigerator has been a flat. I think that's primarily because of the summer. But mobiles are doing well, laptops are doing well, small appliances are picking up. Overall, I think, yes, the first quarter has been weak because of the summer and nothing else. The consumer sentiment is good, so we should see a good Diwali. And the rest 3 quarters should be much better than last year. That is what my assessment.
Yeah, Nilesh, good to get that granular breakup from you. Hi, morning, Surabhi here. Would it be possible to put a rough, number range to it? Like you're saying that refrigerators as a category is flat, but because you're saying that the second summer, so to speak, the October heat period, that should make up for the weakness in the early AC sales. So let's say ACs is a category. This year, what would the growth estimate be? And these personal electronics, mobiles and laptops, which are fast moving, where would you expect their numbers to be? I mean, would it be single-digit growth, 10%? Would it be possible to put some sort of a range?
So AC this year we expect, since we had a poor summer, we should be still landing up in a 7 to 10% growth scenario.
Okay.
If the latter part of the year picks up, which we are quite hopeful. On the numbers of mobile and digital category laptops, what we feel is number-wise there won't be, volume-wise there won't be growth. But what is a big change which is happening, the value is going along. So we should see a growth of around 50 to 20% in value, and number growth would be hardly low single digits. But value is what counts at the end of the day, and that is what we are seeing across all categories. That premiumization is happening, and ASPs, the average sales price of each product, is going up, and that's also a very positive sign.
Oh, okay. Oops. I have to, I think, redo my math now on buying a new laptop because Nilesh is saying
I just bought one.
The value estimates are going up and up. I think I have to relook at my own numbers, jokes aside. But on this part on EMS, Pulkit, coming back to you, how do you rate the listed stocks over here? Because, like Nilesh is pointing out, mobiles, laptops, and this is a fast-moving category. But then the question is, what is left on the table in terms of stock prices? I mean, many of the stocks are trading at 90 times, 100 times, if not more. So, how are you looking at EMS as a space?
Sure. So for EMS, we think there's no doubt that the TAM is growing and growing very rapidly. And we think there's a lot more electronics that are going to be made in India over the next few years. Having said that, one has to look at the way the market is evolving, which means for especially categories which are high volume, low margin categories, as we come to the end of the PLI in the next couple of years, we think there are going to be pretty significant market share shifts because PLI did allow companies to consolidate market share, in which at high valuation, the investors have to be confident of continuity of growth for some of the companies. Hence, what we are seeing many companies do is basically get into component manufacturing, which will make the client base a lot more stickier. And so in that context, I think EMS is a very interesting space over the next few years where market share shifts will happen, but companies that are able to do components, which are able to do backward integration, probably have further right to win going forward.
Okay. All right, gentlemen, thank you very much. Good perspective coming in from all of you. Helps us understand and map the mind of the consumer a little more clearly. Thank you for joining us this morning.